Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. In this video, we're going to revisit the S&P 500 estimates for 2024. We're going to look at some really key charts, and we'll go through some major crypto levels. If you like the content, please smash that like button and don't forget to subscribe. All the indicators that I use inside the daily videos come from the service at ctksmethod.org. Let's run the numbers. It's important to understand total Fed liquidity. You can see this blue line here. Total Fed liquidity gives us a really good indication if the markets are being supported or they're not being supported. One thing that I've been noticing just very recently, total Fed liquidity is starting to roll over. We can see that the stock market, the S&P 500 and Bitcoin have felt that pullback in financial support from the Fed. When we get these pullbacks in the past, it doesn't mean that the markets are immediately going to tank. They could be subject to some pretty negative short-term price action, but you can see here the markets can continue to go up while the Fed liquidity goes down. But as you also see, it does follow. Therefore, we must be aware of this. But is it a cause for panic? No, not really. It's a cause for awareness. Financial markets are like putting jigsaw pieces together. When we look at the inverted put-call ratio, we can see that the markets are becoming more and more bearish. When they become more and more bearish, we continually see this association. The inverted put-call ratio tends to move in alignment with the main market and also Bitcoin. We're not currently seeing a big spike down. When we see these big spike downs, they're often a cause for weakness inside the financial markets. This is something that we're paying close attention to. When looking at the inverted VIX from a daily basis, we can see that there is indeed an association between the VIX and the main markets especially. What we've seen, a bit of a weakening in the VIX, the inverted VIX recently, and an uptake. Now, what was this uptake caused by? That's the important thing to understand. Before we get into that, when we look at the S&P 500 futures, they've been doing quite well. These are daily charts. We can see the daily has been doing exceptionally well, and the blue overlay is Bitcoin. We can see some pretty standout behavior by the Russell 2000. Look at it go. This has been an incredibly long period of upward price momentum. That's something that we have to bear in mind. When you have upward price momentum like this, you expect price to move in a wave. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. Right now, it's just been going up and up and up and up and up. This is exactly why Fed liquidity is coming out of the system. If the markets get too overheated, they need to retrace to normalize. A retracement is not the end of the world. It is normal. You can see it much better here on this particular chart where we talked about the S&P 500 quite a few episodes ago. We have a variety of different estimates put out by different institutions for the end of 2024. We can see that the majority of names are just in this particular area here, from 4,200 to 5,100. Now, what does this mean? This means that the markets are likely to rally up, but then also likely to spend pretty much the majority of 2024 consolidating. That is no problem at all for us borsoggers, us buy on red, sell on greeners. When you buy on red, you get onto the right side of the percentage. When you sell on green, you're actually de-risking as things go up. Of course, you just need to have a strategy how to deal with increasing upward price momentum. Inside the crypto market, if the Bitcoin ETF does get approved, and it gets approved when people expect it to get approved, which is basically the first week of January, that's going to be fantastic for the crypto market. When we're looking at the S&P 500 right now, What we don't understand is the objective dynamic market structure based on all of price history. And all of price history is quite a lot. It's literally nearly 56,000 days worth. One really good question that I received inside the comments was Aaron's comment, doesn't recent price just follow all of price history? When we look at the S&P 500, that's 50, let's just call it, round it up, 56,000 days worth of data. Let's just draw a rectangle up representing that 56,000 days of data. We've seen about 2 months worth of really positive momentum. This is around 61 days. If we take that 61 days and divide it by, say, well, let's make it 55,815. Just to be a little bit more precise, that's a pretty low number. Let's get it to a percent by just multiplying it by 100. This is 1/10 of 1%. Now, what does this mean and how do I relate it back to this rectangle? If you took 1% of the data, and let's just pretend it's just a little tiny slice, because it is, 1/10 of 1% of the data would look something like that little rectangle right there, but that's already too big. Remember, it's not 1%, it's 1/10 of 1% of total price action. Another way to look at it, if you went and interviewed 55,815 people, you would get a census. You would get an absolute feeling as to what the population was talking about. You might be asking them all sorts of questions, like what the census does. But if you took a sample of 61 people and you said these 61 people represent exactly what these 55,815 people would say, of course, that's not realistic. The smaller the sample size, the greater the variability. This is a really classic statistical sampling problem. What typically happens is people just look at recent indicative price, that 1/10 of 1% of price behavior. They make all their decisions based on this. Hey, it's going up. It must continue to go up forever. It will not move in a wave. It's not going to do what it normally does, which is move up, consolidate, or move up and retrace. It's not going to do that. It's just going to keep on moving up forever. We know financial markets don't work that way. They're always moving between structural support and structural resistance levels. But how can I prove that out? We've proven it out each and every day for many years. So let's just zoom in to this specific area here. What do we notice? The S&P 500 is coming into structural resistance, trying to get through it, but it cannot. This shaded area here is called an SC, or a Stanfield zone. It's composed of SLs, or Stanfield levels, and these SLs come from all of price history, marked up through the standards-based process, which is the CTKS method. This literally gives you X-ray vision into the markets. When we had that weakness just recently, it was just 5 days ago, literally 5 days ago, we just crushed through this underpinning structural support and we got caught by a safety net. This is why it's critical to know where the safety nets are inside the market. If you don't know where the safety nets are, you do not know how close support is or how far away it is. We can see just down here, there's an absolute ton of support between 45.31 and 45.91, but there's some fresh air gaps. In a fresh air gap, price can move down very quickly and it can catch people off guard. A positive fresh air gap means that the price can fill very quickly, but you can see as soon as we start to get into resistance, the price ascent, the acceleration of price decreases, and the more we get, the more it slows down. We prove that literally every day on this channel. We also know if price gets above, the S&P 500 gets above 48.21, it can really party. I mean party hard, because there's literally no structural resistance in this area. An exceptional market indicator are junk bonds. Junk bonds, you can see, have done a crossover. This is fantastic. They're currently at 95.46. But looking at it like this on the daily basis, we literally cannot tell where the structural support and structural resistance levels are. So let's pop on the indicator. what you can see is junk bonds had a fresh air gap, and this is quite common for fresh air gaps. They tend to get filled. And we can see all this incredible structural resistance was above junk bonds when it came up to here. This is exactly why the S&P 500 didn't just keep on rallying. Junk bonds is an incredible indicator of risk on or risk off activity. And we can currently see that junk bonds is at 95.46. It got above all of this structural resistance levels. And here we were a little bit concerned that it could come straight back down again. But instead, it just grinded through this. This is really positive news. When we zoom in and look at the S&P 500, and we need to look at this because we need to understand if the crypto market can follow through on positive momentum. Let's pop on the indicator that's literally just analyzing 56,000 days worth of structural resistance and structural support. We can see that the S&P 500, because of that big push up in junk bonds, is trying to get through these structural levels, but these are heavy. Heavy structural levels are a problem because they're heavy. They are literally hard to get through, and we can see it time and time and time and time again. We're not through it just yet, but it is a positive sign. Now we need to look more deeply into the charts. The DXY, coming back to yesterday's video, it's really important to understand the DXY's power inside financial markets. If the DXY is decaying, we would expect the market indices, Bitcoin, crypto to rally. It doesn't always occur, and that's something that you should bear in mind, but it does occur more than it doesn't. Let's have a look at the nearly 21,000 days worth of data. And let's pop on the smart money indicator. What we see here is the DXY came into a negative fresh air zone and it just plummeted. And it plummeted to where? A structural support level. This is why it's so critical to know where the structure is inside the market. We can see the DXY literally came down to this 192.20 level and it stopped. It literally stopped. And when it stopped, look at this. There's another negative fresh air gap below it. This is really important to comprehend. When we get a structural support area, if price doesn't obey it, if it slices through it, it means that it's got enormous negative momentum. What we're seeing here is not that. We've seen a negative fresh air gap fill in between this structural resistance level and this structural support level. But the concept is there's another one beneath it. If the DXY continues to come down, that will push junk bonds up. That will push the S&P 500, the NASDAQ, all the stock markets and crypto up. Please keep your eye on the new DXY levels. When I said there was going to be incoming volatility, this is exactly what I was talking about. Volatility occurs not only to the downside, but also to the upside. With the breakdown in the DXY, the uptick in junk bonds, we would expect the NASDAQ would be rallying. After all, it's very yield sensitive. But what is the NASDAQ doing? It's not doing much. In fact, it's positive for sure. But what about the structural support and resistance levels? We can see it's in the middle of a fresh air gap. This just reconfirms what I was talking about in yesterday's video. Apple and Microsoft, the big leaders, are not doing what they should be doing currently. And this is probably because the Fed is exiting liquidity out of the system. Over the years, we've called many things. For example, when Tesla was just decaying, I was saying to everybody, it's coming up into incredible structural support. Now is the time to get in. And it bounced. Oil was just taking off, but it was getting too overextended. The probability of retracement was severe, and it came down. The concept is right here and now, the NASDAQ is not doing what it should be doing. It should be rallying. It should have filled this fresh air gap and moved up to this 15,187 mark. Let's have a look at total crypto market cap. We can see that there was weakness. This is on a daily basis. Yesterday, the crypto market was incredibly weak. It was very volatile. And when we look at today, the past 24 hours, they've been pretty volatile too. But we need to understand the structural support and structural resistance levels. What are we looking at right here? This $1.633 trillion mark. This is an important level to get above, and we're seeing more strength here than we've seen in a very long time. But of course, we understand where it came from. It came from junk bonds. It came from the decay in the DXY through a negative fresh air gap. We can see there's also a lot of underpinning support. We love this. This is really good because we've managed to move up and above this negative fresh air gap. We don't want to get down there, but is Bitcoin confirming it? When we look at Bitcoin on a daily basis, we can see all that variability, all that volatility coming back through the past 24 hours. But we've also seen that we've not exceeded the previous high here. That's actually bad news. Total crypto market did exceed it, which is really good, but it's not being confirmed with Bitcoin. That means that Bitcoin is weak. Now, there's actually a lack of structural overhead resistance. It starts to kick in at 43,843. So we're below structural resistance as well. We did bounce from structural support and we've been held very well. And we would anticipate this anyway. That's why knowing where the structure is just your license to have X-ray vision into the market. We can see it in the S&P 500. We know it's coming into structural resistance. We can see it. We know that the DXY got into a negative fresh air gap and it filled it. It filled the first one at least. Our hope is that it just keeps on going and fills the second one as well. If that happens, we would expect Bitcoin to bypass this previous structural level and just start to rally. Total crypto market cap is showing some good signs, but it is not confirmed by Bitcoin. Looking at Litecoin, across the past 24 hours, Litecoin had a fantastic day. And always bear in mind, when you're doing your three-dimensional risk management, your CTKS code, always assume the price can move for you, can move against you, and can move nowhere. Have three simultaneous strategies playing out at all times. The one thing that we really want to understand, where is the structural support and resistance levels? We saw that we had a positive fresh air gap from this 73.49 up to 76.04. When you have a positive fresh air gap, you expect price to move up very quickly. But what happened next? Lots of structural resistance playing out, and that meant that the sellers were attracted in here to push price down, and that's exactly what they did. Also note that when you have a positive fresh air gap, but price can't maintain itself above it, it becomes a negative fresh air gap. You can see what happens typically. It will come up, get filled, come back, retest, and consolidate. Consolidating price action is what you want to see, because if you don't see it, it becomes unsustainable. When the markets get uncertain, I personally make sure that I've got fresh and dry powder laying around, but I also make sure that I keep my orders inside the market as well. But you must be comfortable with what you leave inside the market. If you're freaking out and you can't sleep, it means you have too much in. Always be aware, there's no problem getting dry powder. The purpose of trading and investing is to make money and also to keep it. Bitcoin Cash did particularly well in the past 24 hours as well. What you'll typically find in the crypto market, you have these big down events and big up events as well. Let's have a quick look at Solana's structural support and structural resistance levels. We're just going to zoom into this area here. We can see that Solana has been doing incredibly well. It went on an absolute rally, but it's currently losing a bit of steam. It can be easy to think the price will just simply go up and up and up forever, but this is not the case. price is always moving between structural levels, structural resistance, structural support, structural resistance, structural support. If it gets through, it's going to the next one. These fresh air gaps are particularly important to comprehend because price can move very quickly and abruptly, both up and also both down. You'll see this all the time. When there's a fresh air gap, you must pay attention to the resistance level above that. And Solana has done incredibly well. There's absolutely no question about it. And when we look at the structural resistance level that Solana needs to overcome, it's 123.23. We can see that Solana's come down to structural support at 108.94. It's shown a little bit of weakness here. It's just kind of going the way that Bitcoin is going. Bitcoin is not showing a lot of strength, although total is. This means the rally is primarily occurring in the alt market. But of course, we also know no alt can escape Bitcoin's gravity. That's a very important rule. If Bitcoin decides to come down, it doesn't matter how good the alt is, it will join Bitcoin. It goes for the ride. And of course, vice versa, if Bitcoin's going up, the alts are going up with it. You can imagine the stress and just sheer frustration of not knowing what's going on if you don't have the structural levels. And here Solana's chart has been marked up with approximately 1,200 days of data. We're looking at what is actually occurring inside Solana's price structure. We're not focusing on 0.1% of price action. We're focusing on 100%. Tomorrow, I'll do a bit of a public masterclass in how to interpret these SLs and how to understand where price can go next. If that sounds good to you, please leave a comment and just say, yeah, that sounds good to me. I'd like to know that. If you like the content, please smash that like button and don't forget to subscribe. All the indicators that I use inside the daily videos come from the service at ctksmethod.org. When looking at the structural levels, please focus initially on the Tier 1 charts and then look at Tier 2 and Tier 3. It's vitally important to know where the Tier 1s are going. If you would like to learn how to draw up those SLs, those structural support and resistance levels, I have a very special gift for you. A near total scholarship is being offered for both Level 1 and Level 2 CTKS Method certification. This means that you'll learn how to draw up those lines that you see me go through each and every day. Please make sure you tell your friends and family about this very special thing. To be eligible for this near full scholarship, you need to subscribe and watch 3 or more videos before episode 1000. In each video that you watch, you need to find one rule and note the timestamp and what the text of the rule is. And then directly message me on Twitter with your 3+ rules and your 3+ timestamp links. This very special scholarship ends midnight New Year's Eve, so if you want it, hey, go for it. Please let me know in the comments, do you have any questions or queries? I'm always very happy to help out and to clarify things. Thank you so much for watching. Kate and I really appreciate and are very grateful to see you here. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.